Hey folks, David Frost, mystrategicforecast.com. Welcome for another episode of Common Sense Technical Analysis. Today is Wednesday, June 25th, 2014. Looking at a chart of the SPY, mirror image of the S&P 500, and surprise, surprise, the market bounces right back on less volume that we had yesterday. So basically we're in the every news is good news. Poor GDP numbers send the market up. It just nothing makes sense. But here's where it does make sense, because the market is floating up what appears to be, at least we'll take it day by day, but so far so good, appears to be floating up into what I believe will be a cycle turn date in July. So guess what? The higher it goes, the larger it's going to fall. So basically, my thing is the market's going to go up into my date, which my members will know about in advance. And what's going to happen is the market's going to dump out, and that's my take. So what we have here is a light volume scenario. Everything is good news. Just send the market up. One day down is met with almost an equal day up on the next day, and maybe we continue down again tomorrow. Maybe we don't. But again, if we do right now, I'm looking at maybe 191, 190 is the most downside I would expect right now. I said last night maybe it appears to the 50-period moving average right here. So that's about the largest downside I see up until, sometime next month, we'll say. So that's where we are. It's just basically the market's never going down scenario. And we've been here before, and everybody believes that the market just can't go down. And we've been here so many times in the past. And one thing's for sure, you can't point to a time when that was true. Okay, so that means that the market can't go down is not a true statement, because every time they believe the market can't go down, eventually it goes down. It really hasn't gone down in a long, long time. I mean, anything substantial, at least in a year and a half. But you know what? The time will come. So the longer we get away from home, and what I mean by that is if home base is equilibrium or common sense in the markets, the farther away we get from home, the more chance it has to happen that we're going to have that downside momentum pick up in full force that we haven't seen in over a year and a half. So the farther we get away from home, the scarier it gets. We're always going to go back to home. So look for us to start going back home sometime in July. All right. Not much else happened today other than the float in the market. Interest rates were down a little bit, but I still think that this is basically bullish consolidation. We could go down and test this area here. Certainly when the market sells off, I would expect us to go down. But between now and then, I still think there's higher prices or higher yields upon us. Let's just take a look at the 30-year. Same routine. This is bullish. If we go to let's say, why is this bullish? Because we had this up move here, and now we've been chopping around sideways for several weeks. And I just think that this portends for higher yields. I look for 350 to, let's say, even this high here at 355, all the way up here at 354. So, I still think that's in the cards before the yields may get pressed back down when the market sells off, but we'll see what happens. That's not set in stone. Each market is its own market, but that's what we would typically see. But nevertheless, maybe we see an event that spells higher rates. So rates higher could mean less borrowing, which could mean slower economy, which could mean lower stock market. So, you have to play these things out one step at a time. We'll know it when we see it, and we'll see it when we get there. So other than that, we can look at gold, flat day on gold, but here's the story. The story is really, really simple. This big up move is meaningful. It means something. So if we chop around here for a few weeks, I'm going to look for higher prices in gold, because I think, and I said it last night, I think gold goes up when the market goes down this next time around. So we'll see what happens there. Oil, slightly higher today. Again, I still think there's higher prices in oil. We're nowhere near a short in oil. Don't be short in oil. There's not enough upside, predictable upside for us to be long. So we're just watching. We're watching the pattern, and we're watching for time. And when we get to the right time and the right pattern exists, we'll take the trade. And it's most likely going to be on the short side next, but not till July sometime. Other than that, we could look at the gold miners real quick. You know what? Gold miners had a nice move off the bottom, and this one slipped by me. I don't play the miners a lot, only because it's tough, because they're tied to two things. They're tied to gold, and they're also tied to the market. And if gold goes one way and the market goes another way, how do you know which way the miners are going to go? It's not enough of a solid for me to really play that on a consistent basis unless we see something extraordinary. And right now what we're seeing is very similar to gold, where we saw this big up move. Now we're consolidating. If we consolidate down here into the 24 and a half area, 25, and we get to that point next month that I'm discussing, that may be also a solid trade in the GDX, which is the gold miners. It's a basket of gold miners. Let's take a look at the longer term chart here. Weekly chart. So here we have a low, a higher low, and if we continue, and this is bullish. Okay, we're above the 20, we're above the 50 period moving average. We're going to test this high here at let's call it 28, and then the next stop is 31, and then you have a gap fill here at 32 and change, and then you have another pivot here at 35. So there's some upside room here. And we're going to watch this one. I'm going to keep you abreast of this one because I like the way this is forming. This higher low is interesting. I think if we get some momentum in gold, we may take the ride on this one too. We'll see. I'm going to keep you guys in the loop on that one. With that, not much happened today other than the market bounced back from yesterday, but everything else pretty much stayed the same. So I don't want to be repetitive. Common Sense Technical Analysis. I'm David Frost. Thanks for tuning in. We'll see you in the next episode.